Good morning. The world awaits with bated breath to see the democratic system heal itself in Washington today after riots gripped the nation's capital. Meanwhile, the Chicago Mercantile Exchange yesterday reported it had administered 19.1 million contracts in 2020. It's Thursday the 7th. I'm Barry Sadowski. This is our financial breakdown. Index futures are up, although the Nasdaq closed down 2/3 last night, with the dollar continuing its downward spiral. Yesterday saw both composite and service PMIs down 3 to 4 points for December, while factory orders added a better than expected 1%. ADP's employment change figure showed a 123K job contraction, which is important ahead of tomorrow's much followed NFP. Still ahead today, we'll be seeing ISM's non-manufacturing PMIs and jobless claims, the initial figure expected to grow this past week. And at 6 GMT, an address from Fed head Charles Evans. In Canada, traders are expecting an improvement in November's trade deficit, $3.5 billion for November, and a 2-point improvement in December's IV PMI. On the US-Canadian dollar, we can see that the downward trend is weakening as the RSI turns bullish, but the moving average is still downward bound. The pivot point's pretty high up, so there's no need to get cocky unless 127.62 is broken to the upside. European indices closed in the red yesterday with, you guessed it, the FTSE charging ahead with a 3.5% jump. Britain's construction PMI for December showed a 3-tick increase to 55, while Europe's consumer price index improved a tad, closing at minus 0.2% year-on-year for December. Retail sales, on the other hand, plunged by 3.4% month-on-month in November. Later this morning, the EU will be reporting consumer inflation and a load of sentiment indicators, all capped by the ECB's monetary statement at 12:30. At the moment, the Euro GDP is on target, with a possible break above the pendant perhaps on the horizon. Asian markets are closing mainly up in the 0.5% region, the Hang Seng losing 0.5%, but the Nikkei adding a whole percent per 0.60, recouping some of its recent losses. The Australian dollar is down from midnight, saw a $2.5 billion deterioration of the nation's trade surplus in November. On the other hand, housing approval doubled to 6%, and building approvals fell, but not as fast as expected, to a 2.6% increase. With the yen falling and the dollar perhaps maybe relaxing, we can see here a definite reversal that probably started with the Washington kerfuffle. The MACD has crossed above its trigger, but not once, but twice, both confirmed by the histogram, and has gone dramatically from negative to a strong positive. The asset bouncing off the moving average from above is showing some decisiveness. West Texas crude added another $1 to the barrel after the EIA announced a whopping 8 million barrel drawdown. Along with the Saudi cuts, we're seeing a pretty definite uptrend, but that shooting star at the top could indicate a reversal. Possibly wait and see what happens when we hit the moving average. Finally, the corporate world has been stunned by Trump's instigated legislative violence yesterday, Facebook and Twitter freezing the president's accounts, and the head of major U.S. corporations calling for his immediate removal. Spokesmen included GM's May Barra, JP Morgan's Jamie Dimon, and Apple's Tim Cook were among those calling for VP Pence to invoke the 25th Amendment and remove the current president ad hoc. Well, that brings it to the end today. We'll be back again tomorrow to see how the week winds out. Bye.